Ad astra per aspera. In ancient Rome, great generals who had led Roman forces to victory in the service of the state were feted with grand parades. However, in crypto, for all its opulence and excess, there's no such honour. Instead, after winning a landmark legal battle against the SEC, Grayscale's CEO Michael Sonnenschein had to make do with an appearance on CNBC's Squawk Box. But the ruling, as I'll explain in this video, is not only a huge win for Grayscale, it's also a boon for big institutions like BlackRock and Fidelity, and an embarrassment for the SEC. It's a landmark case with far-reaching consequences. To learn more, keep watching. First, I'm going to break down the basics and explain what Grayscale is and why the company wants to issue a spot Bitcoin ETF. If you know the context, feel free to skip ahead to the timestamp marked lawsuit. Now, Grayscale Investments is a major crypto asset manager. Its flagship product, the Grayscale Bitcoin Trust, or GBTC, is the largest Bitcoin fund in the world. In fact, it currently owns 3.4% of all outstanding Bitcoin, worth $16.2 billion. Put differently, that's 635,000 BTC, or 4.5 times the size of MicroStrategy's holdings. Wowzers. Now, Grayscale claims the trust has close to 1 million investors and offers them a product that's free from the hassles of BTC custody and comes with potential tax benefits. It can also be accessed through old-school financial institutions like Fidelity or Charles Schwab. The big downsides, however, are that trusts like GBTC come with heavy fees and, well, you don't actually own your BTC when you invest in this way. So, if you'll indulge me in a quick promotional aside, if you want to avoid institutional fees and hold your own BTC, you can find great discounts on hardware wallets down on our deals page. Link is in the description below. Now, let's talk strategy. Since its inception in 2013, Grayscale has harbored the ambition to convert its GBTC into an ETF, or exchange-traded fund, subject to the green light from regulators, of course. Why, I hear you ask? Well, the short of it is that ETFs open the door to vastly more investors and hence earning potential. But that's not the only consideration. To understand this fully, I must briefly explain the difference between the two instruments, GBTC and Grayscale's prospective spot ETF. While both represent a share in the underlying asset, i.e. BTC, they differ starkly in the dynamics of share issuance and redemption. Of the two, only the ETF issues and redeems shares on a frequent basis. Now, the consequence of this is that the price of the shares and the underlying assets can and often do deviate. In the case of GBTC and the Bitcoin backing it, this deviation is known as the GBTC premium, or discount. And it's believed to be the instrument behind the implosion of crypto hedge funds like Three Arrows Capital. Now, logically, it would be much better for everyone if GBTC could actually issue and redeem shares based on real-time supply and demand, like they could with a spot Bitcoin ETF. And this is one reason behind Grayscale's application to convert. Another is that ETFs are well-known investment tools, often viewed as a safer bet than trusts like GBTC. ETFs are far more acceptable to mutual fund managers and pension funds, which, as I stated previously, translates to more earning potential for the likes of Grayscale. To put this into context, one recent study, which helps explain the recent surge in demand by institutional investors for spot Bitcoin ETFs, estimates that they could bring $30 billion in new demand for BTC. Okay, so now that we have the basics covered, let's move on to the lawsuit. In June of last year, Grayscale's application to the SEC for the spot Bitcoin ETF was rejected on the grounds that the proposal did not meet anti-fraud and investor protection standards. The SEC had also rejected similar applications filed by Fidelity, Invesco, and Cathie Wood's ARK. However, unlike the others, Grayscale sued the SEC over its decision. Now, as I've said before, when I first heard about the ruling, I didn't expect that Grayscale would stand much of a chance against the SEC. It was a bold move that could have spelt big trouble for Grayscale had it failed. But, well, it turned out to be a move that paid off. Grayscale's main argument during the lawsuit was that the SEC shouldn't reject its spot Bitcoin ETF since it already approved Bitcoin futures ETFs. As Grayscale wrote on its website, quote, Bitcoin's spot and futures markets are inextricably linked, as evidenced by third-party studies showing 99% correlation. Also, as far as investor protection is concerned, Grayscale argued, there are no differences between the two. And all three of the court's panel of judges agreed with Grayscale's argument. As Reuters explains it, the judges concluded that its proposed Bitcoin ETF is, quote, materially similar to the approved futures ETFs, since the underlying assets, BTC and BTC futures, are, quote, closely correlated. Moreover, since they both rely on the Chicago Mercantile Exchange, CME, for market surveillance, they have, quote, the same likelihood of detecting fraudulent or manipulative conduct in the market for BTC. And using a beautiful soundbite that has been echoed across the media, the judges concluded that the SEC was, quote, arbitrary and capricious to reject Grayscale's filing. Arbitrary and capricious. That is an old school put down if ever I heard one. Order! Order! Now, there are multiple implications stemming from this ruling. First, I'll explain the implication on the price of BTC. Then I'll look at what it means for institutional investors, and finally I'll explain the impact on Grayscale and its parent company, DCG. So, first, the price of BTC. Immediately after news of Grayscale's victory broke, BTC rose by 7% to nearly $28,000. However, this pump was short-lived, and 3 days later, it fell back down to around $25,000. As I explained in more detail in our weekly review, the SEC was again involved in this price shift. The dump was at least partly caused by the news that the SEC had delayed until October its decision about the pending spot Bitcoin ETF applications from BlackRock and others. And, speaking of BlackRock and other institutional investors, while they might not be publicly rejoicing, in private I bet Larry Fink and his ilk are busting out dance moves like that embarrassing uncle you wished you could uninvite from your wedding. For institutional investors, the biggest implication of the Grayscale win is that it makes it far more likely that their spot Bitcoin ETF filings will be approved by the SEC. For context, the SEC has denied more than 30 proposals since 2021, a 100% rejection rate. And, in case you need a reminder, when BlackRock filed for a spot Bitcoin ETF back in June, it led to a flurry of excitement and optimism that the SEC would approve its application and others like it. After all, BlackRock has an almost spotless record of ETF approvals. The prevailing sentiment at the time was that the world's largest asset manager wouldn't have applied if it didn't fancy its chances of the ETF being approved. At the time, Eric Balchunas, a senior analyst for Bloomberg, had put the chance of a spot Bitcoin ETF approval at 50%. This was a relatively measured assessment. Many other crypto analysts were more optimistic. So too, it seemed, were other institutions who quickly followed BlackRock's lead and filed for spot Bitcoin ETFs of their own. Currently, there's a whole load of firms with such ETF applications in the pipeline, including WisdomTree, Valkyrie, Fidelity, VanEck, Bitwise, Wise Origin, Invesco, ARK Invest, and, of course, BlackRock. Again, we have a video on this which I'll link to below. Now, the combination of BlackRock's application and Grayscale's win appears to be tipping the balance. Bloomberg's Eric and fellow analyst James Seyfarth increased their odds of a spot Bitcoin ETF approval to 75% by the end of the year and to 95% by the end of 2024. Bullish AF, in other words. Finally, though, let's look at what this win means for Grayscale. Now, the first thing to know is that the company's victory doesn't mean that GBTC will automatically be converted to a spot Bitcoin ETF. Instead, we're currently in a 45-day window during which the SEC can appeal the ruling and bring it to the Supreme Court. Presuming this doesn't happen, the court will then specify how its decision should be executed. This could include instructing the SEC to approve or revisit Grayscale's application, or requiring Grayscale to refile. And it's important to note that the SEC could still reject the proposal, but clearly it'll need to come up with a much stronger argument than it has to date, or risk another embarrassing defeat in court. So, what if it all goes well for Grayscale and the SEC doesn't appeal or reject its application? Well, the first thing you should know is that if Grayscale refiles, its application is unlikely to be approved before that of BlackRock and some of the other institutions mentioned earlier that are ahead in the queue. Now, this is important because there is a first-mover advantage here, which means that the first few institutions to be granted spot Bitcoin ETFs will grab a significant chunk of the market share simply because they're early. Nonetheless, if Grayscale's spot ETF is approved, it's likely to be followed by a range of other crypto ETFs. As CEO Michael Sonnenschein told CNBC, the company's goal is to have, quote, a whole family of digital asset ETFs. And the other notable development Michael mentioned in that interview is that the granting of an ETF would allow Grayscale to lower its fees. Currently, the fees for GBTC are 2%, which is exceptionally high compared to most ETFs. Grayscale has previously said that the high fees are due to the legal costs involved in maintaining the financial instrument. With a potential shift to an ETF, Michael said the fees will drop, but he did not specify the amount. Now, this is a thorny issue for Grayscale. GBTC's 2% fee translates to tens of millions of dollars in passive income a month for Grayscale's parent company, Digital Currency Group, or DCG. This is money DCG badly needs, since another of its subsidiaries, Genesis, owes billions of dollars to investors. Because of this, there is speculation that Grayscale doesn't actually want a spot Bitcoin ETF to be approved right away. The more time passes, the more money it makes in fees. However, given the wave of other institutional spot ETF filings, delaying on Grayscale's part is not really an option if it wants to compete with the other big institutions for a slice of that ETF pie. Put differently, Grayscale finds itself between BlackRock and a hard place. Friends, Romans, countrymen, before you retreat to your quarters, I beseech you, grant us the honour of a firm and mighty thrust upon yon like icon, and should you not yet be among our ranks, enlist by pressing the subscribe button. Are you eager to share the spoils of Minerva's wisdom contained herein? Then let Mercury carry forth this message to others through sharing this moving tapestry. By the gods, I will proclaim it once more, without falter or hesitation, should you be on the hunt for the finest hardware wallets or merchandise, or are merely seeking the treasures of grand deals, venture forth onto our bastion of bargains, the Coin Bureau deals page, which awaits you below. Valete amici et videbo vos cito.